Okay, let's go ahead and record receiving money from our clients that we billed. We will receive the money in February, but the activities were performed in January. That's why we entered those time cards previously, right? And billed them. Now we're going to collect. Before we collect, we have a credit memo, right? So sometime after we sent an invoice to DeCre Snacks and Bites, we had probably conversation with the proprietor, and for whatever reason, the agreement was that we will give him a discount, right? 10% of discount on a large invoice, reasonable, right? So let's go ahead and book that. So it will be under customers. And right here we have create credit memo and refunds, and we'll know debits and credits behind that. So the customer is able for DeCre food snacks. Okay, we're not going to print it later. We're going to assume that it's printed. Okay. Here's our credit memo number. Make sure the date. The reason we do it before processing the payments from customers is because, again, it's important to remember, just like when we pay our vendors, once there's a credit memo, it will reduce the open balance, and you can see the open balance right here, $7,681.25. So the item we have to pick, we have discount, client discount. It's basically a contra revenue account, right? So basically, and we'll see it with debits and credits right now, but what it does is it kind of does the counter to the revenue. It reduces it. All right, so here it is. Because essentially discounts, they reduce our revenues. I mean, some people would argue that you could book it as an expense. I would beg to differ. I prefer to book them as a reduction in revenue because honestly, that's what it is. We were supposed to collect one amount, then we reduced it. So again, to me, that is much more appropriate. But again, that's not what we're here to discuss. Here we're discussing debits and credits. So what happens when we have credit memo? Well, one thing for sure, right? We will reduce our accounts receivable. So what it says is, well, I reviewed how much money you owe me, and I'm going to give you discount $768.13. So my accounts receivables is going down. Accounts receivables is an asset, right? And assets are reduced when credited. What else is happening? Well, our revenue is reduced, right? But instead of figuring out against which one did we apply it to, because we probably had some payroll and other stuff, we're just going to go and put it against our general, 49. We kind of did some update to our general ledger as well to make it easier. But basically, it's a debit. We have a GL called discounts. Again, it's a revenue type account, but again, when revenue is debited, it's reduced. So it is there to reduce our overall roll-up account of 41,000, which is again our service revenue income. This one is a discount, but it is a revenue account. So again, in our setup, and again, depends on how you set up your general ledger. And please ask us questions. We'll be happy to clarify in case you don't know. But this amount right here, right, it is a credit to account 11,000 accounts receivable. It reduces our accounts receivable. Accounts receivable is an asset. Assets are reduced when credited. And this amount right here is a debit to account 49,900. 49,900 is our discount account. We just keep it there for discounts. And again, that kind of goes against our overall 41,000 account, which is our overall roll-up revenue account. So revenues are reduced when debited. That's what we have. Debits and credits are in place. So here it is. All right, we're going to save and close. So here it is. Save and close. It's correct. Give a refund, well, apply to an invoice, right? So we're going to apply it to an invoice. That's the purpose here. Okay, and here's that invoice, right? 10%. It asks us, right? Makes sense. And so that's what's happening down. Alright, accounts receivable is reduced, revenue is reduced, right? Because that's what discounts do. Alright, let's get that money. So now we will be receiving money. In our setting right now, we're using the functionality of what's called undeposited funds. Let me double check that. Yeah, they call it undeposited funds. It's a preset account, 12,000. We will use it in this case. You can bypass it, but anyway, we will use it. So here it is, payment remittance. We received a check from our client. So let's start receiving them. So again, customers, and see how it affects debits and credits. Customers receive payments. All right, this one is from DeCre properties. All right, payment. Let's enter that. 454125. All right, so it's check. We can enter check number 1084. All right, date. All right, here it is. It matches, right? No discounts and credits applied. All is here. So, what are the debits and credits behind this specific transaction? So let's break it out. All right, so one thing we know that this amount previously we booked into accounts receivables. All right, previously we debited accounts receivables to go up, right? Because accounts receivable is an asset. In this case, we will credit it because we'll be reducing it. 25, right? So it is being credited. Accounts receivable is reduced because now we received that check from our clients. Now what's happening? We haven't deposited this one, right? So in this case, it goes to our undeposited funds. We're using that functionality. We could go straight to the bank, but in this case, we're just going to use this functionality with QuickBooks. So again, for 5, for 1, 25. Here it is, debits and credits are in balance. So this amount right here, right? What is it? It's a credit. It's a credit to account 11,000. That's our accounts receivables. It's an asset. It's reduced. Another asset goes up. That's undeposited funds. So we have that check. Again, it's laying on our desk. Some would argue don't use undeposited funds. Once you deposit it in the bank, then you could reflect it as deposited. Either way it works. It's just one more step to keep more track to see how many checks you have undeposited. I don't mind. I mean, in this simulation, we want to show kind of more greater level of control over the details, so why not, right? So here it is. All right, again, this amount, right? It's becoming our debit to 12,000 and credit to 11,000. Both are asset. 11,000 goes down because assets are reduced when credited. 12,000 goes up because assets are increased when debited. Undeposited, again, funds go up. None of it is on this interface. Notice it. None of it is on this interface, but it is being impacted. Trust me. We can show it by going through, essentially, for example, this, right? So just to show you how you can double check that you're actually doing it correctly. So what I do is, alright, so let's say we have this date. Right. So you can see that as of now, there's no transactions. Let's go ahead and book this one. See, there it is. And these are our accounts that we talked about, right? Okay. So again, it's very important to understand debits and credits behind every transaction that you book. When in doubt, run this report and you'll see your debits and credits. Again, there might be more than one transaction in one day. Most likely there would be. There are other ways to filter it. Again, we'll show more of this report, but it's transaction detail report, my favorite report. With that report, you can basically research books fairly easy. Anyway, we know the debits and credits behind the interface. No? All right. Let's keep rolling. We have a few more payments that we got to receive. Next one is received from temp services. Right, so the date is here, yep, 5070. It's a check. There it is again. I'm just gonna show it here so that right, debits and credits. This is your debits and credits. We have quite a few, so I'll just keep going since I've explained the first one, and then you can just follow along. Again, from time to time I'll mention it, but again, this amount is both debit and a credit, right? It's a credit to 11,000, again 11,000, and it's a debit to account 12,000, right? Undeposited funds goes up, accounts receivable goes down. Snacks and bites. Okay, we had a discount on this one, and you can see it, right? Here we have the discount, but we already booked it, right? We previously when we booked the discount, so accounts receivable was reduced. So that even though that was the original 7,681 was the original amount, the amount due is 6,000 because we remember we applied that. So again, in this case, let's just do this one. There is your debits and credits, right? Undeposited funds goes up. Those checks in your drawer before you made your trip to the bank, that goes up. That's an asset, right? And then accounts receivables, that's an asset goes down. It's being credited. So here it is. Um, let's put in the payment amount. And they paid with a check. There it is. Dates are correct. All right, we have another one. You can see that we definitely put some effort into this simulation. We did a huge volume because that's what you're likely to face in real world anyway. So this is a great opportunity to practice, how can you handle large volume? Because again, some people say, well, I have accounting experience. Well, part of accounting experience is being able to handle large volumes of data while remembering the debits and credits, right? And again, say debits and credits right here for this interface. Oh. There it is again. Let's reflect it. Very straightforward. Again, it's just a matter of remembering debits and credits. And again, each interface every time, except for time cards, right? Remember, every time we do bookkeeping transaction that actually reflects on our general ledger. Again, remember entering just time cards alone does not, but then we convert it to where it does, and we've demonstrated that. But every time we actually do impact general ledger, it's debits and credits. It's called double entry accounting. There's absolutely no way around it. Okay, let's go ahead and book this one. Dates are correct. Right, another payment. Right, these are the good times to go packs. We are getting paid. Good thing it's very consistent in our simulation, which is sometimes the case, sometimes not in real life. But nevertheless, again, here the purpose of this simulation is obviously to show the basics of debits and credits on operating, books for a fairly mid-size operation. 2242, okay, 224255, good to go. Yep, all right, debits and credits right here. This is what? This is debit to 12,000 and a credit to 11. One more here, and this one is from Food Traders. Getting paid is good. There it is. All I'm doing is I'm changing the numbers because the rest is the same. Again, this interface, the customer payment, the way it is set up for this specific installation, and that's the default for most of you. It goes through undeposited funds. When you receive that check, you're gonna go and receive it through customer payment, and at that point, it will go through undeposited funds. All right, so here we are, good to go. Saving new. All right, so let's see, so things. Thank you, okay, here it is, good to go. Debits and credits are in balance, saving you. The group gas station on Main Street. Here it is. And again, this is one of those where we're just doing the simulation with accounts receivables, really, and accounts payable and payroll to full extent. Going forward, will increase complexity where the things, span over a couple of months, and you have basically accounts receivable aging and all that. But right now, again, let's concentrate on debits and credits behind the interfaces. That's very important to understand. Okay, so here they are. Good to go. Saving new. Let me just do this correction since this was actually in 18. So yes. Here's the next one. All right, we're still collecting money. All right, so this one is 18. We're still collecting money. That's good. All right, here's our debits and credits. Debits and credits are always in balance, right? We remember that. That's a very important portion of that all. Here's your debits and credits. This one is from County Cable. Right? Again, debits and credits behind each, and you get to see the volume. But again, each time debits and credits are impacted, remember that. Few more, almost there, right? But that's the real life. That's the real life. When people ask me, well, I have bookkeeping experience, so I ask them, okay, let's see how many of those you can do and how fast you can do them, while remembering your debits and credits, right? Remember debits and credits always, always. Again, what is this? This is a debit to 12,000. Our undeposited funds went up, and then it's a credit to 11,000. Our accounts receivables went down. See, I remember it as I do that, regardless of how many times I do it. I don't do bookkeeping very often nowadays, but again, every time I do, I refresh myself to make sure that I do remember what is going on. Most complex accounting problems are solved with debits and credits. You reduce it to that. Once you understand the debits and credits behind it, you can solve it. Okay, debits and credits in balance. Good to go. Saving you. And a few more. A few more. We have this. This simulation is definitely much more realistic than the food truck. If you remember food truck, food truck was definitely good basics. This is both the debits and credits repetition, making sure that you got it, and it is also the volume, the consistency. Can you do it again? So you said you have your debits and credits behind this transaction. So here it is. Okay, so again, what we're doing with these transactions is that we're converting essentially, right? You can see it on debits and credits. We're converting our accounts receivables into undeposited funds. We're taking one asset, reduce it, and increase the other asset. Saving. And again, this definitely gives you the opportunity to get a sense for the volume you would have in a basically, what would be considered a small operation. So that's definitely a good opportunity to practice. And debits and credits are in place, they equal each other, all good here, saving now. Now again, they're not deposits yet, so remember we're just converting. We're just converting, and I'll show you in a second our accounts receivables to our essentially undeposited fund. Let's but hold on just a second. This one is for real estate holdings. Okay. Debits and credits are in place. All good. Okay, let's continue with receiving payments from our clients. Let's see, next we have tobacco auto for all. Right. There, 200,730. Alright, 219, 2021. Check 5506. Again, what's happening right now with this, right? Accounts receivables is going down, thus it is credited. Undeposited funds, right, goes up. Those are assets. We're just converting one asset into another. Again, this amount is a debit to account 12,000 and a credit to account 11,000. Same thing here. And again, I'm just gonna kind of work our way through it. We have very extensive simulation this time around. Yeah, all good. And again, what you see here is that we don't have to enter a lot of things right now because we entered them ahead of time. However, still we have to know debits and credits. And again, as I always stress and demonstrate is that there is debit and there is credit or multiple debits and credits, and ultimately they equal each other for each interface. So this interface has debits and credits. If somebody tells you no, there isn't, there are. Here they are, right? Again, credit to accounts receivables. Accounts receivables is an asset. They go down when credited, and then undeposited funds go up when debited because that's an asset too. All right, let's continue. Still receiving payments from our clients here. Again, because we build it using our time cards and all that, we don't have to enter quite a few things, right? We just say, okay, here's the amount that matches, here's our debits and credits, good to go. There it is, here's our debits and credits. Debits and credits are always equal each other. In this case, it's just this one amount, right? Again, it's the simulation is a little bit more complex than food truck, but it is still a little bit simpler than majority of real life operations, but it gets you there. It gets you this. Okay. And again, here's our debits and credits behind this transaction. Let's continue. Here it is, right? Again, debits and credits equal each other. This amount is both debit, right, and a credit. It's a debit to 12,000, credit to 11. Your clients, right? That's good. That's very important. And here it is. Debits and credits equal each other, right? And we know debits and credits behind each one of us. So continue. All right. And again, all of that is calculated based on the time card information that we entered. That is the reason we showed it, right? Again, the time cards information itself, once it's entered, does not impact general ledger and does not impact debits and credit as we demonstrated, but it does once we start processing that information, through our payroll and accounts receivable modules, which we have demonstrated, right? And we continue to demonstrate. So again, debits and credits equal each other. Let's continue. I did quite a bit of work there. So quite a few clients we get to collect. Again, debits and credits. Remember those. And again, the reason we're doing so many of them is instead of one is to show again that, yeah, that's how you treat it. And one after another, consistent treatment is important. Understanding that, yeah, that's what happens in QuickBooks when we get it. These are the debits and credits being impacted. We know exactly what's happening as we have those checks arriving, and we put them in our drawer. And again, the next step that we'll demonstrate would be the deposits, right? Because now we're going to take those checks and deposit them, but almost there. We know debits and credits behind each one of these transactions. There they are. Save and continue. All of this can be traced to time cards that we entered. Because those time cards contain these billing activities, right? Isn't that cool? Again, we'll show in some of other simulations where you can bypass it and enter it straight from the statements, but in this case, again, we want to show the importance of integrating everything together here. B6 for 750. Good to go. Debits and credits. We know those. Saving new. And wholesale produce. Debits and credits. Again, we know them behind this, right? Behind this interface. We know our debits and credits. All right, so again, this amount is basically reducing our accounts receivables, right? That's a credit to 11,000. This amount right here is a debit to 12,000. Either way, but again, here they are. Here's the transaction. There it is again. Um, Chances, right? But anyway, same amount, different client. Same again. And the last one, consulting. Again, on the last one, let's just solidify the debits and credits behind this interface. What's going on? And again, this amount, we enter it once, right? We enter it here, but it is also reflected here. It kind of goes everywhere. But this amount is a credit to account 11,000, which is our accounts receivables. It reduces it, right? Accounts receivables, the amount of money this client owes us is reduced, and accounts receivable is an asset, and assets are reduced when credited. What else is happening? This amount also, and I suppose it's here, right? Because we put it in check. That check ends up on our desk. That is qualified as undeposited funds. They're not in the bank yet, so undeposited funds is an asset, and it goes up when debited. Right, makes sense. So as we have those checks on our desk and undeposited funds, and they go up, they have to be debited. So again, these are our debits and credits. Let's save and close and go to the next step. And next step, we will be depositing all these undeposited funds. So let's go ahead and get started with that. All right, so in this case, we went to the bank and we deposited like 3 of these checks, right? So banking, right, make deposit. Right, so here we are, we have all of this in place. And again, we could, do it slightly differently, but in this case, let's do it this way. So again, select which items, right? So in this case, it's this, this, and this, all right? So these three items, we will deposit them, all right? So we're gonna say, okay. So here they are. We're depositing into our general account. What's the date? And again, the sequence itself obviously would be slightly different because we would do that right after we have these undeposited funds. And, in the future simulations, we might make that adjustment. But what's important here is to understand the debits and credits behind it. All right, so again, let's make sure we understand, and a lot of, and the accounts are here. So in this case, it's going to be much easier to understand, right? So, but again, let's solidify. So what's happening? Undeposited funds, remember from the previous one, we talked about it. It's been going up, it's been debiting. What will happen to it now? Now we will credit it because we will reduce it, right? So we're going to take out these 4 checks, right? There it is, right? And this is our still undeposited funds. So that drawer in our desk for undeposited funds, that's the 12,000, right? And we're taking it out. It's an asset. Assets are reduced when credited. So here we are, those 4 checks. What else is happening? Well, those checks will go to our bank account and clear, right? They will clear by the sum of all this, which again we can just essentially take from here. 16, 524, 37. There it is. Debits and credits equal each other, right? So these amounts, individually, like I show here, they're credits to account 12,000 undeposited funds, and this amount right here, we can call it here deposit total, right? That's the debit to account 10,100, our general bank account, right? Here's our debt. In the memo, we can put transaction number, right? To make it more unique. All right, and let's go ahead and save a new. So the next one, it says, pick the next ones. All right, before we close that one. So the next ones are this one, this one, this one, this one, and this one, and not this one. That's fine. 12,000, yes. Okay. So here they are again. Same thing, right? Just got to show again how it's all happening, right? What is happening at this point? So let's just demonstrate it. Let's demonstrate it right here. Just have it here, but nevertheless. So we have 1, 2, 3, 4, 5 of those this time. 5 of those, right? And this will go right here. All right. So what are our 5 checks? And here they are, 12,675, right? Just like on the interface. And those are credits to our undeposited funds because we're taking those checks out of that drawer and they're no longer undeposited funds. They're converted into another asset, which is our checking account. Right here. Oops. Sorry. 10,100, that's our checking account, and it goes up by 12,675 right here. Voila, debits and credits equal each other, and again, debits and credits behind this interface. So again, let's go ahead and save a new. All right, what's the next one? All right, that's the next one. Let's pick the ones that are on it. Alright. Here they are, right? All those payments, 18,000. Okay, here they are. Again, let's see. 1, 2, 3, 4, 5, 6, 7, 8. Can we fit 1, 2, 3, 4, 5, 6? Yeah, I'm not going to be able to fit them all on this specific demonstration, but again, what we can do is we can just simplify it like this. All right, so one thing we know is our bank account is going to go up. It is being debited right here by 18,000. All right, and what else we know? We know that these accounts will be reducing our undeposited funds, and undeposited fund is an asset, and to be reduced, they have to be credited. So basically, we will take sum of all of those items, and we know basically it is right here, deposit subtotal. We can change a little. No, 625. There it is. Debits and credits equal each other. Let's continue. Oh, let's just adjust the date. And again, save and new. You know the debits and credits behind it. All right. Again, we go instead of closing, it says, all right, you want to do new, let's pick those out. So let's get through them real quick. Again, kind of shows you debits and credits, but it also shows you, well, there are some cool conveniences that you get from QuickBooks by entering all that. All right, cool. There it is, right? Let's put those in Memos, make sure we can find everything. Right, there it is, same thing, right? Bank account will go up by $15,443.75. Thus, it has to be debited, and all those checks that we took out of the undeposited funds, all these amounts right here, right? They're credits to account 12,000, which is undeposited funds, and you can see it right here from account, and it's deposited to this account. So again, well, our debits and credits equal each other because sum of this, that's what generates this amount anyway. So we're good to go. We can go ahead and book it. And we have one more. One more we have to do. Let's see, they should be the last ones. Yep, they sum up. Again, that's the cool part of keeping it all in QuickBooks. You enter information up front, takes a little bit of time, but then when you process it down the line, it makes your life easier because it's already there. Anyway, debits and credits behind this interface, right? So we pick them out. Okay, here they are. Okay, we're going to deposit it. Each one of this is what? It's a credit. I didn't break it down here, but there are credits to 12,000. It's right here. This is a credit, this is a credit, this is a credit to account 12,000. 12,000 is an undeposited funds. It is an asset. Assets are reduced when credited and makes sense, right? You take those checks out of your drawer, undeposited funds, you deposit them. Undeposited goes down. All right. You credited something, what is debited, you debiting your bank account because you take those checks and convert them from undeposited funds to balance in your bank account. Bank account balance goes up. Bank is an asset. Bank account is an asset. Assets go up when debited. Therefore, here it is. All right, save and close. We don't have any more. That's it, right? We have successfully recorded deposits for the month of February, and those deposits are based on activities that we recorded from time cards from January. That was cool, right? And you observed the whole cycle and you observed the debits and credits behind it. So again, let's keep going forward with our simulation. We have a few more months. We have a lot of other activities, but this was something new, something that we didn't cover in previous simulations. So again, I hope you liked it. Please send us your questions, recommendations, and what else you'd like to see as we move forward. Thank you.